This is our Forex blog for December 9th, 2013, and these are our currency indexes, which let you see what each individual currency is doing. You can see the dollar is kind of going sideways. It's above its hourly for most of the day, which means you want to focus on buys, and then breaks from above to below the hourly, which means you want to focus on sells. And then underneath that you can see the daily, weekly, monthly trend, which is clearly down. So you would want to trade that against the euro, where it's pretty much in an uptrend across the board here. The yen is also weak, and the pound is strong. So basically, it's pretty simple. When you see the euro breaking out, or after a pullback, this one and this one, you want to buy the euro versus the weak ones. Here's some points on the chart that make it simple. If you have one that's in an uptrend, when the perfect oscillator is at the lower Bollinger Band of that indicator, or the -80 level, these are all areas, the deeper the pullback, the better. This is kind of a minor one. If you see on the chart a decent pullback, it's at the lower band. These are all excellent areas to look for pullbacks. And most of the time, a perfect oscillator times exceptionally well times to buy it. And if you get one currency that gives a buy signal while simultaneously you have one, for instance right here, that is weak, then you want to definitely double up on your size. So let's take a look at some charts to see how to use that. But you can see our euro-dollar signals here. If you don't want to have to learn how to trade and you just want to wait for signals, you can see on Sunday there's a small trade here. It went up 5-6 pips. This one here went up about 25 pips, 10 pips. I mean, it was a pretty dead day. That's one way to trade, or you can use any intraday time frame. Let's just say a 5-minute chart. The euro's strong, the dollar's weak. You're looking for buys. And you can also use our new Hurst bands. If you know the trend of the currency, which our currency index does, put a Hurst band on here, and you can adjust it to time to fit any size currency chart. The 5-minute and short time frame charts, 0.618, works pretty well. And basically you want to look to buy at the lower bands. So you can see you bought here, it went up a little bit, but ultimately you didn't really make much. It came back down here, it started to go back up here, you get in, you made money. It comes down to the lower band here, you probably broke even, and then you made a lot of money on this last trade. If you count up, and actually let's start earlier in the day, you caught this huge win too. So you got, or maybe you got only a small win here, but maybe you missed that trade, but you had a small win, small win, small win. I mean, decent win, small win, and nice 20 pip win. And again, this works on all time frames, but this is one way to use the bands, to just trade and wait for the bands to give a signal. Now, by the way, these bands are used in our Forex signals as one of the about 150 different types of chart pattern trades that we look for. We have 3-line breaks, Fibonacci's, double tops, double bottoms. When new highs are made for the day, we're looking to buy the pullback if our statistical trend tools are saying to do so. And we also see here that the yen was very weak, and we also know the pound was strong. So we're looking to buy the pound dollar too at these lower bands. And again, this is just an easy way to trade, giving you a signal here, here, and here. You have a small win, 20, 30 pip win, 20 pip win, and it's very accurate, as you can see. Now, the yen being weak, we would also be looking to buy the pound yen at the lower bands. Small win, small win. And if it comes close to a band, you can certainly consider buying there. Huge win, small win. So excellent timing tool. And let's take a look at the euro to yen. It doesn't really get much easier than this. You're looking for a buy at or lower than the bands once you get a green bar. So you can see that one went up, this one went up, this one went up, this one went up, this one went up. Most of the time they retrace right at the bands. That's another way to trade using our software. Very easy. It's very hard to screw it up, and that's one of the reasons I put that in there. Now, here's one that's stronger longer term, but was trending down today. So You don't really want to sell this versus some of the stronger ones, but if you happen to want to trade the pound versus the New Zealand was going down today. Keep in mind that the longer term trend is up, so you're less likely to get big wins. Pound New Zealand is also likely to bounce off the lower bands. And you can see about a 25-30 pip win here, or if you held on a little bit longer, again, small win here. In the market, you probably lost in that one. Nice win here. And again, the problem with trading a strong pound versus a strong New Zealand is this. You get a little bounce right here and it goes sideways. Why? Because the New Zealand, because it was down so much, there's buyers trying to get in at the lows. You can use our containment bands, for instance, as great places to look for counter-trend trades, or even better, when you see it's right near the lower bands, draw a trend line on here. When it breaks through that trend line, get in, because the longer-term trend is up. Let me give you an example of that. Let's link these together, so when I scroll this back, we can find a currency that maybe is likely to come down when this one's going up. You can see the CAD has been pretty much going sideways to down all day. The longer-term trend is down. And this one had a little bit of a pullback off the lows. It went up, pulled back a little bit, went up again. I love those two-wave pullbacks. It's very high probability when the longer-term trend is down. So we have a trend down, goes up, down, up. Those kind of patterns are awesome for reversals. And this one, again, when it breaks this trend line here, is likely to go up because the longer-term trend is up. It's one of the stronger pairs. It just happens to have a pullback day after, tremendously huge up days on Friday and Sunday. So at 9 o'clock, we're looking for a pound CAD buy. 9 o'clock, we're looking for a pound CAD buy, and you don't have to use the bands for this. 9 o'clock is around this area. It's right at the lower bands, which makes it even more probable. And it didn't go up forever, but you got two nice little moves off of it before the pullback happened. And again, you draw your trend line on here. When underneath the lower bands, you're likely to get a big pop. And that's just another way of trading with this. And by the way, if you're a scalper, longer term trader, it doesn't make any difference. You can, let's say, put up a euro dollar and we'll put up a 50 tick chart and put the bands on it. Let's say you're a type of trader that has a big account. You like to throw out 20, 30, 50 standard lots at a time. And you see a trend that's up like this. You get into a trade right here. In this case, it maybe went up about 4 or 5 pips. You got into a trade right here, maybe you broke even or lost on, got in here, made 3 or 4 pips. With 10 lots, 5 pips is $500. So, 3 pips, $300, 2 pips, $200. For people that like to scalp with bigger accounts, spotting a tick chart, using the currency indexes to identify if the euro is strong and the dollar is weak, we're obviously looking to buy the lower band. And getting in and out over and over again. I mean, even the tiny little move like this could be $100 after, in a 10 lot trade. And if you use a longer term perspective, when a currency breaks out from below to above, it makes new highs for the day. You can see this little pullback right here, very close to this area. You can actually get into a trade with a 2 or 3 pip stop, using this kind of technique. And sometimes the market explodes up so much and then kind of goes sideways, so it's underneath the bands. That's usually a pretty high probability place. They don't always explode up, but you can take a lot of stabs at the market with literally 2 or 3 pips. And when scalping, if you get 4 or 5 pips over and over again, and there's so many trades to be had scalping, you can use advanced betting techniques where, let's say you're down 3 trades in a row and you trade a smaller size initially. You could do double lots or triple your normal lots to get all of your loss back of the previous series. So let's say for instance you have a loss, and typically you're never wrong 3 times in a row, rarely. So on the third trade you do a 3-lot trade. Let's say you do 1 lot here, 1 lot here, down two lots, maybe 2 or 3 pips each time. You do a 3-lot trade right here and you get 5 pips. Well, guess what? That's equivalent to 15 pips. You've lost 3 pips. 3 pips, that's 6. You've made equivalent of 15 pips on the next trade, so you're up 9 pips. You start over. You know, 1 lot, 1 lot. If you have a series of wins in a row, those are all with only 1 lot, unfortunately. And a lot of times after a loss or 2 in a row, when the market's kind of chopping around, it's not really trending, you'll have those small losses. And when you're trading much bigger lots, that's the time where you catch the 10, 15, 20, 30 pip win. You know, it happens all the time. That's one way that I trade, because I spend so much time working on automated systems, developing the software. When I sit down to trade, I only have an hour, hour and a half. I want to make sure, or at least attempt to make sure, that I make money every day. So scalping is an excellent way of doing that. And in fact, you don't have to use 50 tick charts. You can put up like a 3R range chart. Let's put a little bit more data on here. Let's go back 6 days. And I'm going to change the settings back to the faster ones. This is the default setting here. Alright, so if you're scalping, you're looking at, you know, an uptrend. You get in right here, you lost. Get in again right here, you made money. You got your loss back plus some. The market's trending up. You get in right here, you have a very big win. Get in right here, you have a nice win. Get in right here, you have a nice win. Get in right here, you have a nice win. Get in right here, you probably lost. Get in right here, you have a nice win. Get in right here, you have a huge win. You know, so there really wasn't even 2 losses in a row all day using range charts and our Hurst bands. So if you didn't have the opportunity today, there are days where you will have 2, 3 losses in a row, and then you can just decide to trade a little bit larger lots. And you know, if you're losing, for instance, this amount, this amount, this amount, and then you get this amount, well, guess what? That eats up all of your losses, and you're left with a little bit left over. So you lose a little bit, lose a little bit, you have a big win. Lose a bit, lose a little bit, lose a little bit, have a bigger win. And so the math is behind any kind of statistical based trading when you vary the bet size, just to get back to even or get back to +1, which I try to get back to +1. If I have 3 losses in a row, I don't want to just get even. I want to be up 1. I want to have, let's say my average profit is 10 pips. I might be 2, 3 trades down, and then the next trade I want to get back all those losses plus 10 pips. So that's the way I trade when I scalp. And you got to know your statistics before you do that, or you can wipe your account out. New traders that have no idea what they're doing can easily wipe their account out in a month or 2 if, you know, using this technique. But I'm just showcasing this for advanced traders only.